It's likely that you are familiar with the 80-20 rule. The Pareto principle is another name for this concept. According to this theory, around 20% of the factors are responsible for 80% of the effects. The 80-20 rule can be used in an astonishingly wide variety of different situations. Consider the places where Warren Buffett and his team have put Berkshire Hathaway's money as an illustration of this principle. Here are Warren Buffett's top 7 stocks for 2023. Number 7. Apple Inc. Apple is the one stock that makes up the largest portion of Berkshire Hathaway's marketable securities portfolio. Therefore, the company that manufactures the iPhone seems like a smart place to begin. When it comes to benefits over competitors, Apple's brand name certainly packs a powerful punch. The costs, both in terms of time and effort that customers would incur if they switched to alternative brands, are another economic moat that Apple uses to protect itself from its rivals. Apple's clientele are known for their extreme brand devotion, as seen by the fact that they frequently update their iPhone models when the company releases newer versions. Apple also has lots of efficient scale, which it can use to fend off competition from smaller companies. Additionally, the company has much of what is known as the network effect, which is the phenomenon in which the value of a product rises as more people use that product. Apple is an industry leader in terms of the network effect due to the fact that the value of iPhones and iPads improves as more apps are made accessible. Number 6. Bank of America. Throughout his career, Warren Buffett has found the banking industry to us the most lucrative for investing in companies. It should therefore come as no surprise that a significant proportion of Berkshire Hathaway's invested assets are held in the form of Bank of America shares. The fact that bank stocks are successful in a straightforward game of numbers is one of Buffett's favorite things about investing in the sector. In spite of the fact that banks are cyclical and are consequently vulnerable to weakening during inevitable recessions, most economic contractions only last for a very short period of time. In comparison, periods of economic expansion and bull markets typically continue for a few years. Long periods of economic prosperity make it possible for financial behemoths like Bank of America to increase their deposits and loans, as well as return a sizable amount of their net income to shareholders in the form of dividends and buybacks of their own shares. Another fascinating aspect of Bank of America is the fact that it is the money center bank that is most sensitive to changes in interest rates. Because of the increase in interest rates, Bank of America has witnessed a quarterly increase in its net interest revenue of several $1 billion due to these rate increases. Number 5. Chevron. Chevron has risen to the number 3 spot in Berkshire Hathaway's portfolio over the course of the previous 2 years because to the company's strong performance in the energy sector. The anticipation that spot prices for crude oil and natural gas would remain high is the most likely rationale for Buffett and his financial lieutenants to buy into Chevron. This is the reason that makes the most sense. Even though there has been a lot of focus placed on Russia's invasion of Ukraine and the supply interruptions that have been caused as a result of this event in Europe, the COVID-19 epidemic has been an even more significant factor in the rise in the price of oil and gas. Because energy businesses around the world are reducing their capital expenditures as a result of the uncertain demand caused by the epidemic, it will be years before there is a major rise in the global supply of oil and gas. That is some encouraging information on Chevron's drilling efforts. Chevron, on the other hand, is what's known as an integrated operator. In addition to drilling, the company is also in the business of operating chemical plants, refineries, and transmission pipelines. These are the types of assets that can be used as a hedge against falling oil and natural gas prices. Number 4. Coca-Cola. The investment portfolio of Hathaway has been held continuously for a longer period of time than the beverage corporation Coca-Cola. There are probably 2 main reasons why Buffett and his crew have remained loyal to Coca-Cola for the past 35 years. To begin, Coca-Cola offers an impressively wide range of geographic options. You won't find this company functioning in Cuba, North Korea, or Russia, but they are present in every single other country around the planet. This involves capitalizing on faster growth rates in underpenetrated emerging markets, as well as raking in reliable cash flow in developed market sectors in order to do this. Marketing is the other factor that has contributed significantly to Coca's success. Coca-Cola's is often considered to us the most recognizable brand of consumer goods in the entire world. This is a business that has been successful in bridging the generational divide and connecting with customers of all ages by utilizing a variety of strategies, such as seasonal tie-ins and brand ambassadors on social media. Number 3. American Express. In case it hasn't been brought to your attention yet, Warren Buffett takes a great deal of pleasure in investing Berkshire Hathaway's money in various financial stocks. American Express, which is a corporation that provides credit services, is Berkshire's second longest held stock. This indicates that American Express most probably meets the requirements. In a manner analogous to that of Bank of America, American Express reaps the benefits of excessively prolonged periods of expansion. But what really makes this organization stand out is its ability to double dip into several markets. American Express not only acts as a payment processor, for which it charges fees, but it also engages in money lending, for which it charges fees and/or interest to its cardholders. Lending puts the corporation at risk of possible loan losses during economic downturns. But it enables American Express to expand its operations during prosperous times. In addition, American Express has done an excellent job of attracting cardholders with high incomes. People who make a lot of money are less likely to be negatively affected by above-average inflation or a moderate recession than the usual worker or consumer. Amex's operating performance is now more predictable as a result of this. Number 2. Occidental Petroleum. The fact that Berkshire Hathaway's sixth largest stake is in Occidental Petroleum, and that this position was increased in its entirety just 1 year ago may be the aspect that raises more eyebrows than anything else. Having said that, we will also mention that Berkshire has been owning a total of $10 billion worth of preferred shares in Occidental since 2019. The bull thesis that underpins Occidental is extremely comparable to the one that underpins Chevron. Yet, it does have its own unique characteristics. For instance, despite the fact that Occidental is an integrated operator with downstream assets, a greater proportion of Occidental's revenue is associated with drilling assets than it is with Chevron's. If the price of crude oil remains high for an extended period of time, Buffett's company may be able to get even more leverage by keeping Occidental Petroleum stock. The two huge energy assets held by Berkshire Hathaway each have their own unique balance sheets, which is another significant divergence between the two. Among the major oil firms, Chevron possesses what is widely considered to us the most robust balance sheet. As a result of Occidental's 2019 acquisition of Anadarko, the company is currently trapped in a mountain of debt. If Occidental can continue to claw its way out of the hole it has dug for itself, Buffett and his team may very well have a deal on their hands. However, for that to occur, oil prices will need to continue to us at an elevated level. Number 1. Kraft Heinz. The consumer goods company Kraft Heinz is responsible for 3.9% of Berkshire Hathaway's invested assets. These 7 companies account for 80% of Warren Buffett's portfolio's total value when taken combined. During times of increased uncertainty, such as the one we are currently living through, stocks of consumer staples companies like Kraft Heinz are typically good investments. This is a corporation that possesses more than a dozen reputable brands and has considerable pricing power in general. Because food is one of life's most fundamental needs, people look to Kraft Heinz for reliable forecasts of its operating cash flow. Kraft Heinz is quite arguably Warren Buffett's worst investment. Because of the significant quantities of long-term debt and goodwill that are recorded on the company's balance sheet, the business has very little room for financial maneuverability. In the event that the United States enters a recession in 2023, it is not out of the question that customers may reduce their spending on premium brands like Kraft Heinz in favor of store brands that are less expensive. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.